options, yes. Good question, Don. A stock option is basically, think about what an option is in your life. What is an option in your life? An option in your life is basically something that you could do if you want to, but you don't have to do it, right? Like, so for example, when I was in high school, my mother used to, tell me to apply for a lot of schools so you can have lots of options, right? So an option is basically exactly what it sounds like. An option is the right to buy a stock at a certain price, but you don't have the obligation. So for example, I can go purchase a right. Rights are what's kind of being exchanged when you buy and sell any sort of financial asset, whether stocks, bonds, options, or whatever. You're paying for the right to something, right? So when I buy a share of stock, I'm paying for the right to that company, a percentage of that company's cash flow. All the profit that company makes, a percentage of that will come to me. And so, based on how many shares I own, right? So if I buy an option, then what I might do is I might pay $5 for the right, but not the obligation, but the right to buy this company stock for $100 or whatever, right? So let's say the value of the stock on the market goes up to 150. Well, then that's a pretty good option because I can buy it cheap and sell it at 150 right on the market. And that's the number one rule of investing and making money is buy low, sell high, sell it for what you paid for it. That's pretty much, the universal rule of wealth building everywhere. Is Alibaba and Johnson Johnson good stocks to buy now? Sorry, TZ Frank, I don't really answer questions like that about specific stocks, specific companies. I do have the section, if you could log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com, just log in at the bottom. There's a section that says what Dr. Boyce is buying, and that's where you can actually see what I'm buying. But even then, I'm not really here to tell you that a certain stock is or is not going to go up, because actually the theories say that it's very difficult to predict which stocks are going to go up or which ones are going to go down. What you can look at is you can look at the characteristics of the stock in terms of, what line of business are they in? How stable is that industry? How stable has the company been over time? How are they going to withstand this downturn? Are they likely to benefit from the downturn? Are they likely to benefit from the upturn? So that sort of shapes, the buying decisions that I made. And so there are a few stocks that I listed in the bottom. So if you log in at theblackstockmarketprogram.com, the first month, if you're not in the program yet, the first month is $1. So you can go to the very bottom. There's a section that says what Dr. Boyce is buying, and you can see everything that I'm buying. But I can't make any guarantees on that because that's kind of a legal thing. I have to make sure I let you know this is for educational purposes, not investment advice. What's your opinion about buying stocks on margin, Troy? I think it works. It works when it works. But, anytime you buy on margin, I mean, you're basically taking on debt, and debt is called leverage for a reason. So if you think about the way leverage works, you think about the way any leverage works, like on a seesaw. A seesaw with a lot of leverage is when you're up, you're way up. When you're down, you're way down, right? So that means with debt is risky, but debt is not always bad. Debt can also be beneficial in terms of helping you to accelerate on the income generation process. So debt, the availability of debt, the availability of financing is a really important part of making an economy function. So one of the things I heard today that actually made me a little bit nervous, or maybe a little bit curious, perhaps concerned, is there's a company called Cabbage that loans a lot of money to small businesses. And Cabbage, somebody told me they reached out to Cabbage, and normally Cabbage tells them, oh yeah, if you want to borrow $50,000, you can. Like, they just tell them how much they're eligible for. And they went back to Cabbage, and Cabbage says you're not eligible for any money at all, which means Cabbage doesn't have any money to lend out, which means maybe money is getting harder to obtain, which is really interesting given that the federal government, put so much into the stimulus package where they're supposedly making liquidity available. But if liquidity is available, then why can't Cabbage get money to loan its small businesses, especially at the time where they need it the most? So the lack of liquidity in an economy is yet another problem on top of the problems that are already happening. So a lack of liquidity, meaning a lack of available cash for for at least debt, where you can at least survive and keep your employees instead of having to go bankrupt because you can't pay your bills. A lack of liquidity is deeper than just losing money. There are businesses that can lose money for years and still stay in business because they've got so much cash around. But when you run out of cash and you're not making money, then that's a big problem. So Hopefully we won't have that issue, but in 2008, that was the big problem, is that the banking system collapsed and we weren't able to actually go to banks to get the loans that people needed, which caused, just all kinds of havoc. So, that's becoming an issue now, which is why this Corona thing is kind of a serious thing. One good thing about the Corona situation, however, is that today you might have saw that the stock market rallied. Give me a yes or no if you made money today. If you're an investor, you've been investing the way I've been showing you guys in the program, just consistently across the board, you probably made money. Raise your hand if you made money. You probably made money today, and that's because the market rallied a little bit today. And that's what's going to happen. When the market dips, don't ever think that because the market is down, nobody's making money. There are people making money all the time in every condition. And so it's a matter of kind of knowing how to be positioned so that when the rally does come around, you will benefit. And so what they're finding is that the number of new cases is actually dropping a little bit, not dropping a lot, but leveling off a little bit. And the number of deaths, which is going to lag behind the number of new cases, they're hoping that that'll level off too. And so they saw a little bit of light at the end of the tunnel. Also, they're working on a bunch of new drugs. And also, I think Trump just made a deal with 3M to literally bring in 55 million masks a month, which is an insane amount of masks. As I said, 55 million a month. Good Lord. So, yeah. So basically, they think that things might be getting better, but, nobody really knows for sure. At some point, the economy is going to have to move forward. I mean, unless we're all independently wealthy enough to never work again. So I don't know. James Moore, when opening an account to trade with, is there anything I should know as far as opening up this account? Not much. I think in the beginning, I'm a big fan of keeping it real simple, not overthinking it, not letting all the information scare you. There is a great video that I'll email out to you guys. Actually, it's in your curriculum. If you log in at the blackstockmarketprogram.com, there's a video called How to Buy Your First Share of Stock. And it takes you all through the Ameritrade layout and how Ameritrade works. And a lot of people like that video as a way to get started as well. But really, even simpler is stuff like Robinhood. What's the other one? Cash App. I think Cash App is cool because Cash App allows you to do fractional shares where you can actually, you don't have to even be able to buy a whole share of the stock. Like you can buy Amazon, even though Amazon, last I checked, it was almost $2,000 a share. Maybe it's dropped a little bit since the downturn, but you can actually buy $50 worth of Amazon. So it's pretty cool. Ken, what is the best way to buy stocks that cover a wide range of industries and companies that one may not necessarily be able to buy individually to expand the portfolio? Mutual funds. Mutual funds are a great way to get instant diversification. Mutual funds are kind of like an economic soup. So an economic soup means that you get natural diversification. You can buy one share of the mutual fund and you get a whole big bunch of different assets in that one share. Almost like if you think about it, you take a ladle of soup that's got onions and carrots and celery and chicken broth and all that. And you take one ladle, you're getting a little bit of everything. A mutual fund kind of operates like an economic soup. And that's important because economically you want to have a balanced diet. And a balanced diet means that you don't want your money. You never want too much of your money in one place. That's one of the most important, most fundamental rules of investing is you spread your money out. Your grandma told you that when she said, don't put all your eggs in one basket. So there you go. Let's see here. Dante says, can you speak of the cryptocurrency and any farm tech stocks you would recommend? In that section at the bottom of the Black Stock Market Program, there's that section on what Dr. Boyce is buying. And I go through each of the stocks that I'm buying. I don't have the names of all these stocks in front of me right now, but I do remember Texas Roadhouse was one of the stocks that I did recommend for different reasons, mostly related to the company's balance sheet. What's really happening now is that a lot of the experts in the so-called smart money is heading towards stocks that are of companies that have really strong balance sheets and/or maybe have an awkward way of benefiting from the downturn. Like Zoom just zoomed through the roof. Because of the downturn. Now, Zoom took a dip today because actually there's an analyst who says Zoom was actually overpriced. So if you have Zoom, you probably lost a little bit of money, but you didn't lose as much as you probably gained before the dip took place. Let's see here. Geraldine, are index stocks more secure than company stocks in general? Yes, because you have something called diversification, which is one of the most important rules of investing, which index funds give you. The individual stocks do not. Or let me scratch that. Individual stocks can give you a little bit of diversification, but they don't give you a lot. They don't give you a lot of diversification. So, like, for example, a company like General Electric is pretty well diversified, but there's like competing theories that pretty much say that maybe a company diversifying its own assets is not the best use of shareholder resources. And what do I mean by that? Well, because back when I was in grad school, we used to read research papers that basically said that it doesn't make sense for a company to diversify and try to be jacks of all trades. It's better if the individual investor owned companies in different industries and they just diversify by having specialists in each area that can maximize profits. So for example, let's say that I have stock in a company that makes cheeseburgers, and they say, hey, we want to diversify and we want to invest in and start making bottled water. And we also want to diversify and start making auto parts, right? So you got a company that's making cheeseburgers, bottled water, and auto parts. Well, they're probably not going to be able to do all three of those things equally efficiently well. They're going to be better if they specialize, right? So, so you have this one share in this one company that owns, that's making cheeseburgers, bottled water, and auto parts. Well, why not just let the investor, and a lot of experts say, well, how about you just specialize, keep focus on cheeseburgers, make as much cheeseburger money as you can, and then just let your shareholders go buy shares in a bottled water company if they want that exposure. They can also buy shares in an auto parts company if they want that exposure. They don't have to sort of go through you, right? Because the managers, they're sort of stewards of your money. Managers of a company have a fiduciary responsibility to protect your money, protect your wealth. So they're kind of, how in church you go to, Christian. I don't know if anybody here a Christian. Well, when I used to go to Christian church, and my daddy, I'm still a Christian. My daddy's a pastor, but I guess once a Christian, always a Christian. When I would go to church, they would always say the only way to God is through Jesus. And so a lot of times managers might feel that the investor's money, the only way to get to profitability, the only way to grow your money is through us. When really you can actually buy shares in different companies. And in each case, you've got a management team in that company that takes your money. You're the owner because you own the stock. That's why stock ownership is so important for Black people, because Black people need to focus on being owners, right? So you're the owner of the company. They work for you. They're basically taking your money, almost like the gardener that comes by the house and takes care of your garden. Their job is to take care of your money. And if they do a bad job of taking care of your money, then you have the right and the ability to go in and fire them. That's what the board of directors is for. That's what shareholder meetings are for. So when you buy shares of stock, you may get letters in the mail saying, hey, the company's thinking about, making an acquisition. Well, they got to ask you. They got to ask for your permission. They can't just do what they want because they're using your money, right? Not, so individually, your power and your leverage is kind of limited. But collectively, shareholders have all the power. They can fire the managers anytime they want, the same way you fire your lawyer or your doctor or your gardener or whatever the case may be. Let's see. Put the questions in the Q&A section. Some of you who are watching on the outside, I'm actually inside the Zoom. I'm going to answer the questions inside the Zoom in the Q&A. And that's the only place I'm going to answer. So that's the only screen I'm looking at right now. So if you got questions somewhere else in the chat or anywhere else, I won't see those. If you want to join the Black Stock Market Program, if you haven't done that yet, you can actually do a 30-day trial for $1 at theblackstockmarketprogram.com. And also, if you want to learn how to buy your first share of stock and you haven't done that yet, there's a really good training video that I've offered you guys. You can go to firstshareofstock.com. I just bought the URL earlier, so it probably won't be active until tomorrow. But if you just write this URL down, write down firstshareofstock.com, you should be able to get access to that video training and learn how to buy your first share of stock. All right, so can you please recommend a Canadian app to buy stocks? You know what? Somebody asked that about London the other day. And you know what? I got to make a note on that because I don't have any in mind right now. But let me write this down. There's one called Wealth Simple Trade, but I want to find some others. So I'm going to write that down actually, because I need to make a list and I'll put it in your curriculum. Let me see. So I'll try to get Canadian apps, apps in the UK. Of course, we got to cover, Africa, African countries, because I know some of you are from Africa. And then I'll look in some other countries as well. So we'll just make an international database because that question comes up a lot. All right, so the next question that I see here is, Dr. Boyce, what are the tax implications of buying stocks? Do we pay taxes on unrealized capital gains? No, you do have to pay taxes when you sell, but unrealized capital gains you don't. But you do want to talk to your accountant and make sure that your accountant is aware of the stocks that you hold so they can properly account for that. And so talk to your accountant. Your accountant can help you with that. Like this year is a good year to, really get a lot of tax write-offs if you've been losing money on your stock sales or in your stocks. So you can sell some and get the tax write-off to balance that against other income. Is having options a good idea for beginners, says James. I think it's okay. Just make sure you understand what you're doing, because options can feel a lot like gambling, because you get a quick fix as far as like, if things go really well, you'll make a lot of money really fast. But remember, when you buy an option, you can lose all your money. If you buy a share of stock, your chances of losing everything are very, very low. But if you buy an option, your chances of losing everything is very, very high. So, for example, I had a student in the Black Stock Market program who owned a lot of options, and he was a big options trader. And a lot of his options expired worthless when the market crashed, because most of his options were very bullish, meaning that he expected the market to keep going up the way it had been, which was actually a good move, up until about a month ago. Like, nobody saw the coronavirus coming. The economy was on fire for the last decade. And so now the question is whether or not we're going to have a V-shaped recovery, meaning down and right back up, or an L-shaped recovery, which means down and straight across, right? Nobody knows. Let's see here. Mohammed, when looking at which stocks to buy, what are some of the things you research about the company, and what platform do you utilize to conduct research? I use a lot of different platforms. I know CNBC and The Motley Fool, and they've got some others out there that are good. Bloomberg. A lot of these companies have places where you can go and read analyst reports. Even in your Robinhood app, they have analyst reports. I let the analysts break all that down. I mean, I don't go through companies' balance sheets and their annual reports and all that, because there's a lot to say that really it kind of works, but kind of doesn't, because there's something that they call the efficient markets hypothesis, which allegedly claims basically that you can't predict what an individual stock is going to do, definitely not on a short-term basis. And they've tested this extensively in research. So there are a lot of people out there who would say that, if the analysts are already researching everything about this company and predicting, and it's sort of laying out a prediction based on all the publicly available information about this company, that, they would say that the chances of you figuring out something that the analysts don't know are very, very low. And even if you look at analyst reports, what they find is that analysts are all over the place. You could have 10 analysts, all of them went to Harvard, all of them looking at the same information. Half of them say the stock's going to go up, half say the stock's going to go down. Well, who's going to be right? So what a lot of platforms do is they'll take like an average, or they'll maybe say, 40% of the analysts say it's going to go up, 50% say it's going to go down, 10% say you should just hold the stock because it's going to stay neutral, right? But the ability to really predict the stock, that's a big iffy, controversial topic. In academia, it was an absolute no-no. It was almost seen like witchcraft. Like, no, you can't predict individual stocks. But there's a lot of people now that kind of disagree with that notion a little bit. At the very least, one of the things that I know is really true, which wasn't as readily accepted back when I was in grad school, is the fact that the stock market is run by human beings with real emotions, and that human sentiment, that basically how confident investors feel, how much they demand a certain stock, things like that was going to be a huge driving force in, what happens in the market. That, it's not just about the true, honest fundamentals of the stock. So at the end of the day, the weirdest thing in the world is that I could say to you, that's probably going to confuse the hell out of you, but it's true, is that really nobody really knows what a stock is really worth. Nobody knows. We can have guesstimates, right? We know what tends to make it go up, but nobody really knows exactly what a stock is really worth, because nobody can really predict the future most of the time. Maybe there's a couple of examples of that, but most of the time, nobody really knows. So that's why you'll see a stock that one day, 1 month is trading at $200, then suddenly it's trading at 70. How did the market agree that it's worth 70 now when, a month ago it was worth $200? Well, obviously some bad information came out that made you think that the company was going to make less money than it was going to make before. But maybe that's kind of what it was in the beginning, and you're just sort of just now realizing things that were already there in the first place. So that becomes more of a philosophical issue. And that's why I don't really get into stock picking and timing of the market. Timing is where you try to buy the right stock at the right time, right before it goes up, or sell it right before it goes down. There's just evidence to say that that's not a really good strategy. There are people, though, I'm sure, that are watching this video somewhere who are going to disagree and argue me into the ground. But I didn't look at them and say, well, yeah, I'm a professor. I studied this for 20 years, like at a very, very high level. I understand why you think that way, but I've seen a ton of research, hundreds of research papers that say that's just not the case. So that's what I'll lay out there for you guys. Um, Don, since it's issues, would you recommend an account with Robinhood? You know what? I like Robinhood, but I took some of my money out of Robinhood and moved it around. Diversification isn't just across stocks or asset classes. Diversification should also be across apps. I don't put all my money into one account or one app because one bank, one brokerage, one app can go bad. No, my money's spread out. I want to purchase shares of LVMH. I don't know what LVMH and carrying SA are. How do I do so? I'm so sorry. I wish I could tell you, but I do not know. Try looking up the ticker and maybe Googling where they're traded, like which exchange they're traded on. So they may not be on the New York Stock Exchange, or they may not be on the NASDAQ. Maybe they're penny stocks or something like that. Also, is it safe to purchase these types of stocks, being that it's not regulated by the SEC? No, it's not. In a way, stocks that are not regulated by the SEC are inherently more risky because there's no requirement in terms of what they're supposed to share with you or how accurate their information is supposed to be. One of the factors that makes the American stock market worth so much money is the fact that they've got these, the SEC, which is kind of like the financial police out here, basically, telling them like, hey, if you lie to the public, you're going to jail. If you lie to the public, you're going to go bankrupt. If you lie to the public, we're going to take everything you've got. And what that does is it creates safety and security, which causes market prices to go up. That's why the New York Stock Exchange is the most valuable stock market on earth. Now, when you lose security, when people become afraid or people aren't sure or people don't feel safe, prices go down. Like right now, nobody feels safe. Everybody's worried. Everybody's scared. Nobody knows what's going to happen with with this whole virus thing. There's the unknowns and the unknown unknowns and the unknown unknowns, right? So ultimately, you're dealing with this really weird situation where everybody's afraid, and that's why you're seeing a drop in market prices, and it ties right back into the formulas. There are formulas that tell you what individual stocks are worth, what the whole market's worth, and basically variables in those equations shift when risk goes up and everyone gets nervous. And basically imagine it like a fraction. When the numerator goes up, when the denominator goes up, the numerator or the total value of the fraction goes down, right? So that's kind of what you're seeing right now. And by the way, if you want to see more of the lectures and things like that I put in as far as like the basic training and stuff like that, just log in, and I'm gonna put a recording of this in the blackstockmarketprogram.com. That's the blackstockmarketprogram.com. If you're not in the program yet, you can actually do the first 30 days for $1. So feel free to go to theblackstockmarketprogram.com and you can